Hey everyone, I'm Mr. Tommy. If you've been paying even a little bit of attention to the markets lately, there's one name you just can't escape: NVIDIA. Its stock has shot up like a rocket, and it's created this massive wave of excitement, but, a ton of fear too. And that gets us to the big question, the one that's on pretty much everyone's mind. Wow, just look at this. This chart right here, this is what all the fuss is about. I mean, that line is going up so fast, so steeply, it's practically a vertical wall. When you see something like this, it triggers one of two reactions, right? For some people, it's pure FOMO, fear of missing out. For others, it's a giant red flag screaming bubble. And that tension is exactly what we're going to dig into today. So, which is it? Is this incredible run the real deal, a solid investment in the future, or is it a dangerous bubble just waiting to pop? Are we witnessing the birth of a whole new technological era, or are we just watching history repeat itself with some fancy 21st century tulip bulbs? Okay, before we jump in, let's get one thing straight, and this is really important. This explainer is absolutely not financial advice, okay? I'm not going to tell you whether to buy, sell, or hold NVIDIA. What I am going to do is give you a way to think about this whole situation, a framework, a mental toolkit to help you cut through the noise and figure things out for yourself, all right? Let's get in. So here's how we're going to break this down. First, we'll look at what NVIDIA actually is and why it's so dominant in AI. Then we'll dig into that whole tulip bubble comparison. Next up, we'll talk about the real risks here. We'll also cover some common mistakes beginner investors make. And finally, we'll wrap up by thinking about how this all fits into your own personal portfolio. All right, section 1. Let's start with the basics, the fundamentals. Because before we can even talk about the stock, we have to understand the company behind it. What is all this hype? And more importantly, all this money actually coming from? And what's fascinating is how simple the story becomes when you look at the numbers. Check out their revenue breakdown. That massive slice of the pie, that's their data center business. We're talking over $51 billion in one quarter. That accounts for almost 90% of their entire revenue. So let's be clear, this incredible growth, it's not about video games anymore. It's all about them being the engine for the entire global AI revolution. And when I say they're the engine, I'm not exaggerating. They don't just play in this field, they pretty much own it. Think about this, 92%. That's their share of the market for these super powerful chips, these GPUs that are the absolute bedrock for building and running AI. That isn't just being number one, that is a stranglehold. It's basically a monopoly on the single most critical piece of hardware for this AI gold rush. So here's the key takeaway, the thing you really need to get. NVIDIA isn't just selling silicon. No. They are selling the picks and shovels in the middle of the biggest gold rush of our generation. They're building the literal infrastructure, what the CEO calls AI factories. These are just massive, massive data centers where all the tech giants, we're talking Google, Microsoft, you name it, are building the future of, well, everything. Okay, section 2. Now that we know what NVIDIA actually does, let's tackle that ghost that's haunting this whole conversation, the tulip bubble. Is this just history repeating itself? Let's take a look. So, first things first, what even is a speculative bubble? Well, in simple terms, it's when the price of something completely disconnects from its actual fundamental value. Its price isn't based on what it does or what it earns, it's based on pure hype, the hope that you can sell it to someone else for more money down the road. That's it. And right away, when you put them side by side, you can see the comparison starts to get, well, a little shaky. Tulip Mania, that was all about pretty flowers. Tulips don't make anything. They don't generate cash flow. Their price was driven by nothing but speculation. Now look at NVIDIA. This is a real business, selling real technology, and pulling in an absolutely mind-boggling $57 billion in revenue in one quarter, because there's a real, tangible, and frankly, insatiable demand for their products. And hey, don't just take it from me. Listen to the CEO, Jensen Huang. He's on the record saying sales of their new Blackwell chips are off the charts and that their cloud GPUs are totally sold out. This isn't a bunch of people hoarding flower bulbs. This is the biggest companies in the world lining up to buy as much as they can possibly get their hands on. All right, section 3. So, okay, if it's not a classic bubble, does that mean it's risk-free? No way, not even close. But the risks here are a lot more subtle than just waiting for a big pop. Let's move past the bubble talk and look at the actual legitimate challenges an investor needs to think about. Look, the risk isn't that NVIDIA is some fake company. The risks are real, but they're about the business. First, you've got valuation risk. Put simply, the stock is expensive. The current price already assumes that NVIDIA is going to have massive, incredible success for years to come. All that good news is already priced in. Then there's expectation risk. This is a big one. To keep its price up, NVIDIA doesn't just have to do well, it has to be perfect. And finally, competition risk. When you have 92% of a market, you better believe that every other chip company is working around the clock to try and grab a slice of that incredibly profitable pie. And that competition risk isn't just theoretical. I saw this great comment on Reddit that just nails it. Someone pointed out that in some recent tests, a competitor like AMD was getting surprisingly close to NVIDIA's performance. And that's the point, right? NVIDIA is the king of the hill, no doubt. But the challengers are climbing, and they are getting closer. To think they're just going to have this market to themselves forever, well, that would be a pretty big mistake. Okay, section 4. So understanding the business and its risks, that's one piece of the puzzle. But there's another piece that's just as important, and that's understanding your own psychology as an investor, especially when a stock is getting this much attention. And this is a trap that so many beginners fall into. It's almost a script. Step 1, you see the hype everywhere. The stock is shooting to the moon. You get that feeling, FOMO. So, step 2, you buy in, probably near the top. Step 3, the stock has a dip, which, by the way, is completely normal for a stock like this, but you get nervous. So step 4, you panic and sell at a loss. It's a classic cycle of buying high and selling low, driven entirely by emotion. So how do you avoid that roller coaster? The answer is structured thinking. You have to learn to separate two different things: the company's performance, which is the real story, told over months and years, and the stock's daily noise. The stock price can jump all over the place based on a single tweet or a news headline. That's the noise. Your job is to focus on the signal. All right, section 5. Let's get to the final piece of the puzzle. How do you take all of this, the good, the bad, the risks, and actually use it to make a smart decision for you, personally? And this is maybe the most important mindset shift you can make. Your goal is not to be a fortune teller. It's not to guess where the stock is going next week. No. The real goal is to figure out if an investment like this even makes sense for your plan, for your goals, over the long haul. So I can't give you advice, but I can give you the questions you should be asking yourself. First, what's your personal risk tolerance? Like really, can you stomach a big drop without panicking? Next, what's your time horizon? Are you in this for the next few months or the next few decades? And maybe the biggest gut check question: are you truly investing in the long-term future of this company, or are you just speculating, gambling, that the price will keep going up? And I'll leave you with one last thing to chew on. We've spent a lot of time talking about the risks of the stock being overvalued. But what if the real risk, the biggest mistake we could make, is underestimating the sheer scale of the AI revolution? What if, despite this incredible run, this is still just the beginning? Okay, just to hammer it home one final time, this was an exercise in how to think. It was not and is not investment advice. The whole point was to give you a framework so you can do your own homework and come to your own conclusions. At the end of the day, your money and your decisions are yours alone. So if you found this calm, structured way of looking at a pretty crazy market story helpful and you'd like more of it, I'd love it if you'd subscribe to the Fine Anatomy channel. Thanks so much for watching.